Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. U.S. payrolls today set to define Fed path after labor cracks. 2. U.S.-Iran high-stakes talks begin in Oman amid war fears. 3. New START expires as Russia-Ukraine talks end without breakthrough. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. One. U.S. payrolls today set to define Fed path after labor cracks. Primary asset classes impacted: U.S. Treasuries, 2-year, 10-year, Fed funds futures, U.S. equities, S&P 500, Russell 2000, DXY, and USD pairs, gold. What happened? Challenger data showed 108,000 U.S. job cuts announced in January, highest for any January since 2009. Initial claims exceeded expectations, reinforcing softening signals. Fed March cut probability jumped to 23% from 9% earlier this week. Today's non-farm payrolls consensus sits around 50 to 85,000 jobs. Why it matters. Labor market deterioration would validate dovish repricing already underway and force markets to confront recession risk rather than soft landing assumptions. The data sequence creates binary risk. Significant miss would accelerate Treasury rally, pressure dollar and support gold, while upside surprise could trigger sharp reversal in duration positioning. Fed communication has emphasized data dependence, making today's print directly consequential for March meeting odds and cross-asset volatility. Key numbers to remember. Challenger January job cuts at 108,000, highest January since 2009. Tech and rate-sensitive sectors led announcements. Fed March cut probability jumped to 23% from 9% earlier this week per CME FedWatch. Non-farm payrolls consensus around 50 to 85,000. Miss below 50,000 would sharply accelerate easing bets. What to watch next? Today's 8:30 Eastern release will determine near-term Fed narrative and cross-asset trajectory. Downside surprise validates labor deterioration and supports Treasuries while pressuring dollar and risk assets. Upside surprise challenges current repricing and triggers position unwind in duration longs. Average hourly earnings equally critical. Acceleration above 4% complicates rate cut case despite weak headline. Next week's CPI then becomes confirmation or contradiction point for any Fed path repricing triggered today. 2. U.S.-Iran high-stakes talks begin in Oman amid war fears. Primary asset classes impacted: energy complex, Brent, WTI, defense equities, VIX, and equity volatility, USD pairs, gold and safe haven assets. What happened? U.S. and Iranian delegations meet in Oman today for first direct nuclear negotiations since 2022 amid deep rifts and mounting war fears. U.S. State Department urged American citizens to leave Iran immediately. Rapidan Energy Group estimates 75% probability of military confrontation if talks fail. U.S. has deployed massive naval armada, including USS Abraham Lincoln Carrier Group, to the region. Why it matters. Talks failure would likely trigger military escalation with immediate oil price spike, given Strait of Hormuz handles 20% of global crude transit. Elevated confrontation probability already supports risk premia in energy markets and defense equities while pressuring broader risk sentiment. Success would remove significant geopolitical tail risk, ease oil prices, and support risk assets, but deep divergences on scope make breakthrough unlikely. Trump's maximalist demands covering nuclear missiles and proxies versus Iran's nuclear-only position create substantial gap. Key numbers to remember. Rapidan Energy Group estimates 75% probability of military confrontation if negotiations fail to produce framework. U.S. has deployed Carrier Strike Group, additional F-15E aircraft, and naval assets, creating largest regional military presence since 2020. Strait of Hormuz handles 20% of global oil shipments. Brent holds mid-$66 range with geopolitical premium embedded. What to watch next? Any breakthrough announcement would trigger immediate oil sell-off and risk-on rotation, while walkout or hostile rhetoric escalates war premium in energy and defense sectors. Weekend provides critical window for progress before Monday markets reopen with full positioning. Iranian response to U.S. maximalist demands will determine whether talks extend or collapse. Concurrent NFP release today may temporarily overshadow geopolitical focus, but oil and VIX will remain sensitive to any Oman headlines throughout the session. 3. New START expires as Russia-Ukraine talks end without breakthrough. Primary asset classes impacted: European equities, defense, energy, euros to US dollars, European natural gas, bonds, nuclear and defense sector globally. What happened? Russia declared it is no longer bound by New START nuclear treaty limits after agreement expired Thursday, marking first time since Cold War without bilateral nuclear arms control. Separately, Russia-Ukraine peace talks in Abu Dhabi concluded after just 3 hours with only prisoner exchange agreement for 314 POWs. Russia launched massive infrastructure attack on Ukraine during negotiations, undermining diplomatic progress. Why it matters. Nuclear treaty expiration introduces long-term strategic tail risk absent from markets for decades, supporting defense sector valuations and geopolitical risk premia. Peace talks failure removes near-term ceasefire optionality that had briefly supported European risk assets earlier this week, validating continued energy risk premium and defense spending trajectories. Combined with U.S.-Iran tensions, geopolitical backdrop compounds risk-off sentiment already driven by labor market concerns and tech rotation, creating multi-front uncertainty for global portfolios. Key numbers to remember. New START expired Thursday. Russia says it will no longer observe limits on deployed nuclear warheads previously capped at 1,550. Abu Dhabi talks lasted only 3 hours. Sole outcome was prisoner exchange of 314 POWs with next round unscheduled. Russia launched 71 missiles and 450 drones at Ukrainian infrastructure during negotiation period. What to watch next? Absence of scheduled follow-up talks suggests diplomatic momentum has stalled, supporting European defense equities and energy risk premium through winter. Any Russian escalation over weekend would pressure euros and European equities Monday while supporting gas prices. Nuclear posture changes unlikely to trigger immediate market reaction but create background risks supporting gold and defense allocations structurally. Today's NFP and US-Iran developments will dominate near-term price action, with Russia-Ukraine relegated to medium-term risk factor until next diplomatic initiative emerges. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters. Every market day,